a brand new week. Very good morning. I'm Kelvin here. Welcome back to a brand new week of, I would say, very exciting and volatile times ahead after what has taken shape on last Friday. Very good morning. Today will be the Monday, the 13th of October 2025. So as usual, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so as usual, let's have a quick recap what has taken shape on a rather interesting and volatile last Friday events that has shook the market, and as well as one particular observation that has taken shape yesterday as well that has a tremendous impact on today's Asia session in terms of the relevant intraday movement of those broad-based cross asset classes that we cover on a frequent basis. That means, i.e., the four major dollar pair, the six key major stock indices, as well as the two commodities market, which is gold XAU/USD, and as well as the West Texas crude oil. So the big news that shook the market on Friday was this renewed trade tension between US and China, where US President Trump actually fired another round of so-called trade tariffs cannon towards China, where he threatened with an additional 100% trade tariffs over here. So let me share with you what he actually mentioned on Friday. All right, so global equities took a hit after President Trump warned that he would impose massive increase of tariffs on Chinese goods as China unveiled curbs of export of rare earths over here. So the thing over here is that we know that there's been this tick for tat trade rhetoric that has taken shape since the start of this year. And also after April, trade tension between US and China has to tone down, where respective key trade officials made for three occasions where they decided to reduce their double-digit trade tariffs among each other, where China goods heading to the US will be taxed at a lower tariff of 30%, and US goods heading into China will be taxed at a lower tier tariff of 10%, as they iron out differences where these trade tariff truce between these two superpowers got extended until 10th of November. So late last week on Thursday, there's this kind of a brinkmanship that has taken shape between these two sides, bearing in mind that earlier at the start of September, somewhere around middle of September, where there was some rosy developments between these two countries, where finally both leaders, President Trump and Chinese presidency, decided to meet first time for a very long time face to face in this upcoming APEC summit meeting in South Korea that could be held at the end of this month, which is 31st of October. So both sides try to test one another who has a holding power to actually get a better deal from respectively from both camps over here, because there was some rumors spreading around saying that finally there could be some things get resolved when both presidents meet face to face. So ahead of this face to face meetup, as usual, brinkmanship maneuvers are in play. So both sides are trying to test the resolve of both party, who is able to give in more carrot, or what are the sticks that this party want to throw at each other. So earlier last week, around Thursday, China tried to test the water by imposing this rare earth exports heading into the US. Why rare earth is important? Because these rare earths actually form the raw materials to actually make AI related semiconductor chips and AI related semiconductor we call it products over here. And Trump actually fired back. He's not very happy with this, saying that if China do not remove this rare earth called export restriction heading into US, he will impose this 100% trade tariffs on China goods heading into the States. That means China exports going into the US. And he gave a deadline of 1st of November, with effect 1st of November. And bear in mind, the last trade, we call it talks that take shape between US and China, we call it trade officials. They decided to extend the trade tariff truce until 10th of November. All right, so Trump up the rhetoric by pushing this 10th of November forward to 1st of November, saying that if China doesn't agree to certain terms and conditions that is more favorable to the US, he will actually impose this 100% additional trade tariffs on China products heading to US with effect on 1st of November, and that causes a massive risk off in the global equity. So what you could see over here is that the global equity ranging from US, Europe, and even those futures market that are trading during the US session, the Nikkei 225 futures and the Hang Seng Index futures, all of them plummet to levels about more than 2%. And this is the worst intraday drop for these respective major stock indices futures and US stock indices since April this year, where Trump unveiled his so-called global trade tariffs. All right, so the SPX is down negative 2.7%, the higher beta Nasdaq 100 down negative 3.59%, the Dow Jones down negative 1.9%, and also the Russell 2000 down negative 3% as well, being also a higher beta stock indices in the US stock market. And what's interesting over here is that we know that there's this taco trade narrative that is always at play, which means Trump always chickens out after he tend to actually give a very strong, harsh rhetoric towards China. Then thereafter, he tends to back down to actually offer more for this kind of brinkmanship play or negotiation play. So indeed, this taco narrative starts to play out as well on Sunday, where Trump actually tweeted together with some comments from his vice president Vance over here. He's saying that they actually opened this olive door for China to make a deal. All right, so what he actually posted over here on his social media, give me a minute. Yeah, over here. Trump later posted a statement that hinted a possible off-ramp for Chinese President Xi Jinping while issuing a veil threat that a full trade war could wound China. Don't worry about China, it will be all fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, neither do I. The USA wants to help China, not hurt it, he wrote on Truth Social, which is his preferred social media platform to actually express his global views. All right. So with this little tweet on Sunday, it causes the risk assets to actually rise. Okay, first to rose on Sunday was the crypto markets, given that the crypto markets is trading on the weekend. Some of the cryptocurrency actually managed to recover from last Friday losses, such as Binance Coin, BNP/USD against US dollar, and also as we are speaking right now, the E-mini futures also has a strong rally as well, where the S&P E-mini futures rose by 1.25%, and the Nasdaq E-mini futures rose by a fair bit of 1.71%. So it seems to us that there is some form of a high volatility on both sides, on the downside or as on the upside, as this trade tension news flow starts to ripple across the market. And most importantly, what's interesting over here is that with this trade tension narrative set side into the market, the dollar begins to get weaker again over here. So like I mentioned earlier on, that whatever bounce that we see in the dollar tends to be more counter reactive bounce. That means a counter corrective rebound within a major downtrend phase. So if you look at the US dollar index over here, give me a minute, let me stress. Right, so the US dollar index that rally did a kind of a bearish reversal candlestick on Friday, right below this pivot, right below this resistance zone of 110 and 153 or 150 over here, which is very close to the minor swing, the key medium term swing high of 1st of August, where the dollar actually collapsed over here. This is the US dollar index due to a rather weak non-farm payroll data released at that point in time, which is 1st of August over here. Then thereafter, it tried to break below the key support level at 97.3. So very quickly, what is 97.3? If we go to the monthly chart of 97.3, is exactly the long-term circular support level that I define through this long-term circular ascending channel support that has been in place since May 2011 low. All right, so it got to survive in the month of September again. Then thereafter, it's tried to stage a rally over here. So it appears that it has now tried to be a very choppy trading configuration. So whatever price action that we see from June all the way down to October so far, this is primarily like a corrective consolidation. So it could take in the form of a sideways range or a potential triangle configuration. So if you look at the daily chart over here, right, so it could be in a sideways range or like a triangle range configuration that I drew from this line here, depicted in gray. At this point in time, let me remove this. All right, so this could be in a symmetrical triangle range configuration or a sideways range configuration with the upper limit at 110 and 150. All right, so we just got to monitor the intraday price movement of how this price developed. But given this kind of rather we call it a choppy news flow, we call it situation where number one, things get muddier right now due to the trade tariffs tension coming back, and also the lack of official US agency government data, as the US government still in a shutdown stage over here, and with this limbo in this release of government official data, like potentially the non-farm payroll data that has been delayed, and also this week's CPI data and retail sales data is likely to be delayed as well, given the fact that the two camps, the both side of the spectrum, the US Democrats and the US Senates are still in loggerheads, refusal to back down to pass that temporary spending bill to allow the US government to get reopened. And with the lack of government official data, the US Federal Reserve policymaker will be likely in the blind spot. But bear in mind that the CME Fed Watch 2 continues to show a high chance of the US Federal Reserve cutting another interest rate cut of 25 basis point by the end of this month, which is the next meeting in October. So let me share with you the CME Fed Watch 2 very quickly. All right, over here. So the CME Fed Watch 2 continues to flag out a high odds of 95.7% chance based on the latest data right now, as compiled by the CME Fed Watch 2, which is taking into account of the trading price action behavior of the Fed Funds futures traders in the Fed Funds futures market. So Fed Funds futures traders has assigned a high chance of 95.7% that the Fed is likely to cut another 25 basis point. The current target rate of the Fed fund rate is 4% to 4.25% to bring down to 3.75% to 4% over here. So the aggregated tab that give us to see the probability of future interest rate hike, cut or hold in the next calendar down the road. All right, so also the odds has started to increase back up again. So still remember before Trump's trade tariffs brinkmanship on China, where he threatened trade tariffs hike of additional 1%, additional 100% on China on last Friday. After he mentioned that remark, and also what has taken shape on yesterday, where he toned down his rhetoric, the Fed Funds futures traders has assigned a high chance again of 87%. So prior to what has taken shape on last Friday, the odds slightly reduced to 70% plus. Now it actually went back up to 87.1 0.2% or 87.70% that the Fed may engineer a third cut for this year to bring down the Fed funds rate much further on the last meeting for this year, which is on the 10th of December 2025, to bring it down to 3.5% to 3.75%. And thereafter, for next year, 2026, right now we see a slightly high chance that the Fed may do a 3 cut instead of 2 cut that has been priced in earlier last week. So right now, after what has taken shape, market participant is looking for a 3 cuts to bring down the Fed funds rate much lower to 2.75% to 3% by the end of the year in 2026, where the last meeting, which is the 9th of December 2026 FOMC meeting, there is a high chance of 59.9%, put it at 60%, slightly above the previous mark, about around hovering about 45%. So now there is a slight chance that there may be 3 cuts to be priced in, or that may take shape in 2026. Previously, prior to the event of Trump trade tariffs rhetoric, higher chance of 2 interest rate cut for 2026. So right now, market is looking at potential 3 interest rate cuts in 2026 after what has taken shape last Friday and on Sunday as well. So market is still assigning a rather higher probability that the Fed will start to cut interest rate and continues to cut into 2026, with 3 interest rate being priced in right now based on the CME Fed Watch 2, taking into account of the price action behavior of the Fed funds futures traders. So that actually causes the US dollar to remain on the weaker side of the story. All right, so that is the key news flow event and its impact on the market that has taken shape on last Friday. And given this rather strong trade rhetoric coming out from Trump, that actually causes safe haven asset like the gold, and also a positive feedback look into silver. And gold managed to actually stage a rally on last Friday, breaking above that short-term pivotal support of 4,012, where initially we expect the price action to do a minor pullback. So that minor pullback scenario has been invalidated on gold. So let me share with you the gold price chart over here. So gold, this is the daily chart of gold. So price action on Friday cleared above the 4,012 level, closed at 4,0116, did an intraday high of 4,023, added 1%. And in today's Asia session, it also attempt to actually stage a fresh all-time high again at 4,049 over here, up by 0.81% as we are speaking right now. All right, so gaining due to this potential trade tension between US and China, and also with the dollar getting weaker as well, that actually benefited gold, and or in some form also has a positive feedback loop back into the silver market as well, where silver is up by 1.6% as it inch up towards the next resistance at 51.95, 52.10 over here. And also what we could see is that WTI could plunges on last Friday due to this uneasiness between these two superpower, and that could potentially also suck out the external demand factor as well. From there, lack of external demand, if this trade tension continues to boils down, and could have an impact on consumer sentiment in the US, and that actually causes the West Texas crude oil to plummet. So West Texas crude oil broke below 60.55, so that is a crucial technical support level. What is this 60.55? Is in fact the medium-term ascending trend line support that I drew from the low of 9th of April, where price action managed to survive since then, where it created this rather complex corrective rebound sideways range configuration. So it broke down below it. 60.55 on Friday did this black Marubozu candlestick down by -5% over here. And in today's Asia session, later I'll share with you, potentially we are now in the midst of a corrective rebound scenario again, all right, after this gap up in today's Asia session. Okay, so now with that, let us now go straight into the intraday technical outlook chart. So today is a full suit of the daily dose, where I covered all the intraday chart of what has taken shape on Friday and on Sunday. All right, that news flow where Trump actually backed down, all right, from his earlier harsh rhetoric. All right, over here. Okay, let me expand my screen so that you guys can have a better view of the charts. All right, so let's start with the FX market first. Okay, give me a couple of seconds to bring out the chart of the euro dollar. All right, so let's kickstart with the euro dollar. Still bear in mind that euro dollar on Friday, I do mention that we do have that residual push down for that. So the residual push down takes shape before it stages that bounce, and when it bounces off from the medium term pivotal support zone, which previously I highlighted also on the daily chart, which is the 115.70, 115.30 level over here. All right, so it managed to stage a bounce on Friday. So very interestingly, after it bounced on Friday, the hourly RSI also continues to shape a series of higher high and higher low. So indicating that some form of short-term bullish momentum has started to creep back into the market over here. So with that, first support level to watch in any minor pullback that may take shape today during the European session, 115.80. 115.30 will be my pivotal support level, which is my medium-term pivotal support level for me to flip to a bullish bias for today. Two resistance level to watch on the intraday basis, which is 116.25 that it tested right now during the US session on last Friday, and also during the Asia session right now at 116.25. Above 116.25 may take us up higher towards 116.50, followed by 116.90, which is also the 50-day moving average, I think, as the next intermediate resistance level to watch. Only a bearish breakdown below 115.30 will invalidate this bullish reversal scenario and see the continuation of that corrective decline sequence extending further towards the downside, exposing the next support level at 114.60, which is the former minor swing high of 31st of July, now turns into a pullback support level on the intermediate basis. So that's for the euro dollar. Next up will be the sterling pound over here. So the sterling pound, I also do mention that do look out for that residual push down. So the residual push down managed to find support at 132.65 before reversing upwards. All right. So with that, where it reversed upwards, it also starts to form a bullish divergence as well. What price action show a lower low, RSI show a higher low over here, and also broke above a parallel descending trend line resistance. All right, over here. So net overall, we start to see a return of bullish momentum, at least in the short term, for the sterling pound or the sterling versus the dollar. So with that, we will flip to a bullish reversal bias scenario for today using 132.65 as my short-term pivotal support level, intermediate support level to watch for my minor pullback at 133.14 level, 133.14 level. So using 132.65 short-term pivotal support, flip to a bullish reversal bias scenario for today. Two key resistance level to watch on the intraday basis, 133.90 followed by 134.40, 134.65, which confluence with the 20-day and the 50-day moving average, acting as a similar resistance area as well. That confluence with 134.40, 134.65. Only a bearish breakdown below 132.65 that would invalidate the bullish reversal bias scenario to see the extension of this corrective decline sequence unfolding further towards the downside, exposing the medium-term pivotal support zone at 132.10, 131.70, which so confluence with the key 200-day moving average over here, which is highlighted in yellow. All right, so that's for the sterling dollar. Next up will be the Aussie dollar. So the Aussie dollar, last Friday, it didn't manage to stage a bounce. So the Aussie dollar is considered as a risk-off proxy currency. That means anything that is pertaining, we start to see a global risk off, the Aussie dollar will tends to fall as well, despite the fact that on Friday, the euro dollar bounces, the sterling dollar bounces. So the Aussie dollar fall in tandem with global stock indices, especially on the S&P 500, and as well as those stock indices that is trading, those Asia stock indices that has also been trading in the US session, the futures market, which is the Hang Seng futures and the Nikkei 225 futures. So it tumbled over here. So what interestingly, where it tumbled, it managed to find support level at the former at the minor swing low area of 27th of September, and that is slightly above the medium-term pivotal support zone of 61.15, 64 figure level, which is confluence with the 200-day moving average, and also the expanding wedge range support that has been in play since 23rd of April 2025 low, which is defined by this gray line over here. All right, so with that, I'll be using a 64.65, pardon me, 64.65. Let me repeat again. I'll be using 64.65 as my short-term pivotal support for today. Today, gap up will be my intermediate support level to watch in any pullback at 64.90. Flip to a intraday bullish reversal bias scenario for today. With two key resistance level to watch will be 65.45 which is very close to the 50-day moving average above 65.45, potentially take us up to Friday Asia session high before that sell-off took shape during the trigger of that harsh Trump rhetoric towards China. That will be at 65.75. Only a bearish breakdown below 64.65 will invalidate today's bullish reversal slash recovery bias scenario to kickstart another extension of this corrective decline sequence, exposing further weakness to retest the medium-term pivotal support area at 64.15, 64 figure level. So that's for the Aussie dollar. Next up will be the dollar yen. So dollar yen continues to remain rather choppy over here. So the dollar yen plummet, hit our short-term pivotal support level, and it recovered in today's Asia session. So given the fact that it's a rather mixed element right now from a technical perspective, given the fact that the dollar yen also tumbled because yen is being viewed as a safe haven currency, and also right now, given the fact that the so-called trade tantrums or rhetoric on Trump has started to tone down on Sunday, so that could actually start to see some bids coming in from the dollar yen, given the fact that yen is also being used as a safe haven proxy in terms of financial distress. So given that that safe haven proxy on yen has started to toned down right now after Trump walked back on his earlier trade harsh rhetoric on Sunday. So I will flip to a neutrality stance instead for the dollar yen. So dollar yen now is being squeezed up between two narrative, one as a reduction of a safe haven proxy, and also in general the dollar we call it weakness has come back into the play, as seen on the euro dollar and the sterling dollar and the Aussie dollar. So yen may be trapped between these two conflicting forces. So flip to a neutrality stance for today between 152.45 and 151.15. Only a breakout above 152.45 may see the continuation of the upside potential to test 153.65, followed by 154.50, which is considered as my major resistance level. So this 154.50 confluence with this major ascending trend line that I drew from the high of 3rd of July 2024. All right, so that's for the dollar yen. All right, flipping to a neutrality stance for today between 152.45 and 151.15. All right, so onward next now to the major stock indices, starting with the Hong Kong 33 over here. So the Hong Kong 33 managed to stage a gap up over here. All right, so this gap up, and also over here is that the bounce also managed to store at the 28th of August minus swing low at 24,820 over here. So given the fact that right now there's this gap up over here, and this gap up can't actually maintain that momentum and starts to slide down towards the gap again over here. So it can't maintain that momentum at the 50-day moving average. All right, so given the fact that it can't maintain above the 50-day moving average and it starts to do this gap down over here, so I'll be very cautious over here. Yeah, this will be my short-term pivotal support at this point in time, given the fact that the Hong Kong 33 also have a high correlation with those Nasdaq 100 and the S&P 500 E-mini futures in the last week or so. So given that the Nasdaq 100 and the E-mini futures are in a bullish formation, later I'll share with you on the CFD chart. So I can still have that bullish bias for today on the Hong Kong 33 using 25,140 as my short-term pivotal support level, which is the gap support level that is formed today. But however, it got to clear past very quickly this intermediate resistance zone at 25,860, 26,070. We saw confluence with very closely to the 50-day moving average where it got rejected earlier in today's Asia session. So above 26,060, which is the former minus swing low of 23rd of September and 26th of September, where price action can't maintain on last Friday, that triggered that steep sell-off on last Friday US session. So a clearance back above 26,060 will increase the odds of a bullish reversal scenario coming back into the Hong Kong 33. That representing the Hang Seng Index to seek out the next intermediate resistance zone at 26,450, 26,570, which confluence with the 20-day moving average as well. However, a bearish breakdown below the gap support level that is formed in today's Asia session at 25,140 that would invalidate the bullish reversal slash recovery scenario to see the extension of this corrective decline sequence extending further towards 24,820 and even 26,260, which is the critical minor swing low area of 1st of August 2025. So that's for the Hong Kong 33. Next up will be the Nikkei 225 representing the Japan 225. So the Nikkei 225 and the Japan 225 is much in a better technical configuration as compared to the Hong Kong 33. Why? Because price action continues to be held above the 50-day moving average, which is also our medium-term pivotal support zone at 44,320 slash 44,125 area over here. So yesterday's US session, last Friday US session sell off managed to stall at this congestion area of 23rd of November and 23rd of the 29th of September and 3rd of October over here at this zone of 45,270, 45,046 over here. And what's interesting over here is that there's this gap up, and this gap up managed to reintegrate back above the 20-day moving average again as we are speaking right now. So I'll be using this gap up over here and also confluence with the 20-day moving average to flip to a bullish buyer stance or bullish reversal stance for today at 45,855. So 45,855 will be my short-term pivotal support level to maintain this potential bullish reversal bias scenario that I have for today on the Japan 225. First resistance level to watch on an intraday basis will be 47,260, where it's a very critical level as well, where this level was broken down on last Friday that triggered that steep sell off. So push up above 47,260 will increase the chance of another round of bullish impulsive upmove sequence taking shape to revisit 48,195 in the next step. Only a bearish breakdown below 45,855 will invalidate today's bullish reversal scenario or bias to seek out a retest of 45,270, 45,046 over here. All right, so that's for the Japan 225. Next up will be the Germany 30 over here. So the Germany 30 also did that squeeze down below that Titan short-term pivotal support that we have for a couple of days ago, and where it actually stopped over here. It actually stopped right exactly at the former minor congestion resistance level. Now turns into a pullback support at 24,155, 24,090. And if you do that Fibo retracement of that last impulsive upmove sequence from 25th of September low all the way up to the current all-time high of 9th of October at 2025 over here, all right, that confluence with the 38.2% Fibo retracement, all right, very closely. So with that, I'll be using that gap up that is formed in today's Asia session at 24,250, pardon me, at 24,250. So that will be my short-term pivotal support for today. To have a potential minor bullish reversal scenario for the Germany 30. First resistance level to watch will be that downside, that support level that broken down, that trigger that sell off now turns into a critical pullback support at 24,550, followed by last Friday US session high at 24,650. All right, so this will be my resistance for today. Only a bearish breakdown below 24,250 will invalidate today's bullish reversal bias to seek out the next intermediate support level at 24,155, 24,090. A breakdown below it may see a deeper corrective decline sequence playing out to test the pivotal support level at 23,900 next over here. So that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30 over here. So the US Wall Street 30 also managed to reintegrate back above the 50-day moving average as we are speaking right now. So using the 50-day moving average and also today's Asia session gap up as the gap support level, which is 45,585. So this will be my short-term pivotal support level. So 45,585, not 485, 45,585 short-term pivotal support. Bullish reversal bias scenario for today. Intermediate resistance zone to watch will be 46,400, 46,310, which is also confluence with the 200-day moving average, and as well as a critical resistance level where previously was a support level that broken down and triggered that steep sell off on last Friday. Only a bearish breakdown below 45,585 will invalidate the bullish reversal bias scenario for today to seek out another round of corrective decline sequence unfolding, retesting 45,190, which is today's Asia session low. A breakdown below it, seek out the medium-term pivotal support zone at 44,940, 44,706, which is the minor swing low area of 21st of August. Second, third of September, and as well as this medium-term ascending trend line that is still in play from the low of 23rd of May 2025. All right, that confluence with this medium-term pivotal support zone of 44,940, 44,706. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 also initially the sell off, then it did that very sharp V-shaped recovery into this Asia session, also reintegrate back above the 50-day moving average, and so reintegrate back above the medium-term ascending channel support from the low of 23rd of May 2025 low over here. So with that, I'll be using that gap up in today's Asia session as my pivotal support level, short-term pivotal support, 6,570, to have a potential minor bullish reversal scenario playing out as long as it didn't break below 6,570. Resistance level to watch on the intermediate basis for today, intraday level 6,690, which confluence with the 20-day moving average very closely, and as well as the level that the price action once broke on Friday on the intraday basis that triggered a massive sell off. So this will be a critical kind of a put away that support level broken now turns into a critical intermediate resistance level. So above 6,690 may see the boost gaining traction towards 6,730. That will be on a intraday basis. All right, so these are the two intraday levels to watch: 6,690, 6,730, as it starts to undergo a potential bullish reversal scenario, as long as 6,570 short-term pivotal support level holds. However, a breakdown below 6,570, it will invalidate today's bullish reversal scenario to seek out a retest again on the medium-term pivotal support level that it managed to store on today's Asia session and on last Friday US session at 6,006, 6,500 level, okay, which is this former minor swing high, now turns into a pullback support level. That's for the Nasdaq 100. Next up will be the, and that's for the S&P 500, pardon me. Next up will be the Nasdaq 100. So the Nasdaq 100 managed to bounce exactly at the 50-day moving average at 24,000 level. All right, so with that, I will use the pivotal, short-term pivotal support as in today's Asia gap up support level at 24,290, short-term pivotal support level. Potential bullish reversal bias for today. Two key resistance level to watch on the intraday basis: 24,795. A breakout above 24,795 may see 25,030 next. Only a bearish breakdown below 24,290 may see a retest on the 50-day moving average, which is so last Friday US session low at 24,000. A breakdown below 24,000 may see a slightly deeper, a slight or corrective move to test the pivotal support area or pivotal support level, medium-term pivotal support level at 23,870, which is the former all-time high of 13th of August 2025, now turns into a pullback support level at 23,870. So that's for the Nasdaq 100. I also sum up all the intraday technical outlook on the all the major intraday technical outlook on the stock indices, or the major stock indices, pardon me. Okay, now with that, let us go to the commodities market, starting with gold XAU/USD. So recall that gold initially on Friday, we do feature gold as my chart of the day, looking for a potential corrective decline sequence to extend further towards 3,892/3,864 before another round of bullish impulsive upmove sequence take shape. But given the fact that price action has taken out 4,012, I got to respect this price action. So that minor corrective pullback or sequence scenario to hit 3,892/3,864, that scenario has been invalidated, and right now we are on the we call it progress of another potential impulsive upmove sequence for gold XAU/USD. So as long as two key support level to watch on the intraday basis: intermediate support 4,012, pivotal support level will be 3,943 that managed to survive on last Friday at the mid of the Asia session. 3,943 short-term pivotal support level, flip to a intraday bullish bias for gold XAU/USD. Next resistance level to watch will be at 4,084, 4,086, followed by 4,122, 4,150, which is a bunch of Fibo extension cluster, and as well as the upper limit of this ongoing medium-term ascending channel that is still in play from the low of 22nd of August 2025. Only a breakdown below 3,943 will flip the honors back to that corrective decline scenario situation again, exposing the support area of 3,892, 3,864, which is so the lower limit of this medium-term ascending channel. So that's for gold XAU/USD. Lastly will be the West Texas crude oil. So very quickly, let's go to the hourly chart of the West Texas crude oil. So the West Texas crude oil, slight as extended, hit our support level at 58.90. Almost hit the second support level at 58 figure level, which is the minor swing low of 8th of May. All right, over here. So given the fact that the RSI has hit an extreme oversold level, but there is no bullish divergence over here, price action going to shape a lower low on the RSI. So right now, it's potentially we may see a continuation of a mean reversion rebound scenario, hitting back towards that support zone that got taken down on last Friday, which is 60.55, 60.90. So as long as this bounce over here, any bounce, I would tend to flip into a bearish bias again. So to put it in a way that still maintain that bullish bias in any bounces, it still maintain that bearish bias in any bounces that may take shape. First bounce support zone, first bounce resistance zone to watch out for will be 60.55, 60.90. Maximum will be 61.80. That is my pivotal resistance level for today. And also, if we do that Fibo retracement of that last most recent impulsive downward sequence taken from the high of last Thursday all the way down to Friday low, that also confluence with the 76.4% Fibo retracement. So still maintain that bearish bias in any bounces with a slightly adjusted downwards short-term pivotal resistance level at 61.80. Next support level, two support level to watch on the intraday basis will be the gap support level for today Asia session at 58.97. A breakdown below 58.97, potentially seek out 58 figure level next. Only a bullish breakout above 61.80 that would invalidate today's intraday bearish bias to see a further squeeze up to revisit the 20-day moving average and also the area of the 50-day moving average coming very close, confluencing very closely at 63.30. All right, so that's for West Texas oil. And also that sum up all the intraday technical outlook on this 12 broad-based cross asset classes. Now, before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So for today, during the start of the European session will be rather quiet. So in fact, today will be a very quiet economic data and events. So the next important potential market moving news will be potentially Eurozone ECB official speech at 9 p.m. Singapore time over here. And at 12:55 a.m. Singapore time, another there will be a Fed official speaking, Fed person. So these are the only two key events to take note for today, and also the ever fluid trade tension news flow that could come up from Trump or any of the US official that is involved in these US-China trade talks, like for example, Vice President Vance. We have the Treasury Secretary, which also has a say in the previous, in this ongoing US-China trade talks as well. So that will be fluid. That we got to monitor that news flow up from your screen, right? So that could also influence the intraday movement of those broad asset classes, but that doesn't have a preset timing over here. And before I go, this week will be the official start of the US Q3 earnings season. All right, so kickstarting from the US bank, so that will take shape on tomorrow, Tuesday, 14th of October, before the start of the US session. JP Morgan, Goldman Sachs, BlackRock, and Wells Fargo. So this Q3 earnings result from this financial may impact the movement of the S&P 500 and as well as the Dow Jones Industrial Average. Not so much on the Nasdaq 100, given that the financials has lower weightage in the Nasdaq 100. All right, so with that, That sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.